Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, November 21st at about noon Eastern. Well, after weeks of mixed signals, the Federal Reserve's tone on monetary policy turned noticeably more dovish today, driving a sharp repricing in interest rate expectations, with traders now seeing an almost 3 in 4 chance of a December rate cut. Wouldn't that be nice? According to the CME FedWatch tool, the odds of a 25 basis point rate reduction at the December 10th policy meeting jumped to 74%, up from just 25% the day before. All right, we'll take it. And now let's go on to 3 charts that could give us some insight into the week to come. First, as we always do, we'll look at a daily chart of the S&P 500 SPDR, symbol SPY. Of course, this is the ETF that closely follows our benchmark S&P 500 index. Now, when I captured this chart today, the SPY was trading at 657, back below the all-time high in October up here at 690, and of course now trading below the red line, the 20-day moving average, which is coming in at 674, the 50-day moving average, which is coming in at 668, and down here to the 200-day move average. It's above that, thank goodness, which is coming in at 613, almost 614. Now we know, you can't see it on this chart, we know that earlier this year the S&P or the S&P 100 dove down to its April low, which was way down to 482. Then it rebounded and climbed higher, finally walking up its 20-day, the red line, moving average all the way up here to that October high, all the way up here to 690. And that was from lows to highs. That was a 43% gain, pretty darn good. From there, it started rolling over, which is natural. Fell down to the 50-day moving average right here, rallied up to 685, fell back down then below the 20-day and 50-day to where it is now at $657. So what do we do with this here? What was support, the 50-day and 20-day, what was support, these moving averages, is now turned into resistance. So it's going to make it a little harder, probably anyway, for the SPY to go back and regain those highs. So we have resistance now here at the 50-day, which we just talked about at 668. At the 20-day, it's 674. And we've got this pivot up here at 685. It's at 685, and then obviously up to 690, the prior high. We have potential support right here from yesterday, Thursday, and today, Friday's, the lows so far. Actually, we can look left right here, and there is that October low right there coming in at the same place at about 653. So that's potential short-term support at any rate right now. Then we can go down here to the August pivot. At 219, right about there. That's a potential support, and we've got the 200-day coming in here, 200-day moving average at about 614. So potential support coming down. Here's another potential support coming in here at about 639, 640. So we've got all of these points here. Should price start to, if it should continue to drop, please know that pullbacks are a normal process as traders and investors take profits. It happens all the time. The market moves in cycles. As I told you for a long time, it doesn't move up forever, and please God, it doesn't move down forever. So, but that's part of this business. Traders, I did it. Traders take profits. I've been doing it for about a month now. So, and I told you that. So it's certainly not the end of the world here, but it's a wake-up call for a lot of people that maybe haven't seen pullbacks before or seen the market take a breather. Also, remember, and I put this in X last week, as a trader, patience isn't only a virtue, it can be a really good strategy as well. So I'm using my patience here, just kind of watching to see what's happening. Okay, our next chart here is a daily chart of the Invesco QQQ, symbol QQQ. This ETF follows the NASDAQ 100, which is made up of the top 100 non-financial stocks in the NASDAQ stock market, including Meta, Amazon, Apple, Alphabet, that whole group. Now, when I captured this chart today, the Qs were trading at $591 and change right here, down from the October all-time high at 637. So that's where we are now. Now we see that the 200-day moving average, the red line's coming in here at 615. Why do we care? Because it can act as a ceiling. That's why we care. When price is under it. Again, what was support can become resistance. The 50-day moving average, same thing, the green line coming in at 607. And if we look all the way down to the 200-day, we see it coming in at 543. So we know, like the SPY, we can't see it on this chart, but the Qs rolled over in April, fell down to 402, then rebounded, and since May walked up that 20-day moving average like the SPYs did. Now the Qs are always a little more volatile, so they can dip below more, probably more than the SPY did, but they can also rally higher when they want to too, because of course they have all the tech stocks in it. So it moved up all the way to these October highs again. Then it lost a little bit of enthusiasm down to the 50-day. Then a pop up here to 637. And then it's fallen the last week or so again down here to where we are at 591 right here. Going forward here, again, what was resistance, what was support becomes resistance. So now we've got the 50-day moving average here, potential resistance, the 20-day potential resistance. We've got this pivot at 626 right here, and again up to the highs at 637. Potential support here is at right down in here. We have yesterday and today's lows. We can, this low back here in October is a little bit higher. We can't use that too much. I guess we could kind of fake it. Also, we can look over here at the August highs. Whoop, my line's dipping there. At the August highs at about 585 for potential support. So in the coming week, everybody wants to know, is this the low? Is this the low? We're not going to know until the market does exactly what the market wants to do. It's good news that the Fed is considering getting more dovish here. That's good news. That could help the market. But we're just in a dicey position right now. So I'm back to my patience mode right here, and I'm going to watch for a few days before I make any big decisions one way or the other. Our final chart today is a daily chart of the Consumer Staples Select Sector Spider Fund, the XLP. The XLP has 37 holdings. Top holdings include Walmart, Costco, Procter & Gamble, Coca-Cola, and Philip Morris. And I'm looking, of course, at staples because they are kind of what we call the opposite of tech stocks. As you can see here, staples came down when tech stocks were flying higher. That's kind of how the market works. And then staples become a whole lot more attractive when tech stocks are falling down. Then staples, which is the things we have to have, it's the food and the drugs of the world, the retailers of the world, things we have to have, those are staples, and they look a lot more attractive, again, when tech stocks are moving lower. So when I captured this chart today, the XLP was trading at $77.77, although I think it moved a little higher after I sent out this video, so I think the XLP is back up a little higher now. It was up higher early in the day, but anyway, it's right here. So when I captured this chart, the XLP was at the time trading at $77.77. That's above the red line, the 20-day moving average, which is coming in at 76. And this is inverse to the 50-day, obviously. The 50-day is up here at 77.98, right at or just above where the XLB is trading right now. And then, of course, the 20-day moving average is up here at $80 and change. So in prior price action, if we look left on this chart, we can see our April lows over here for the XLP came in at $75. Then price rallied back up here in April to 82, then down to 79 in May, then back up, started trading in a range, then started making a little triangle here as it was trading sideways along all of its major moving averages, just up and down, up and down, up and down. But it started making kind of a triangle here, I noted. Then we know that triangles are like pressure cookers, and price can either burst to the upside or downside. In this case, it burst higher, rallied up to 82, even higher than that, 83, and then down, and then fell over and fell good and hard here, all the way down below its major moving averages. Bumped up again here in October, and then down to November lows here, back down to 75. And then, of course, it rallied to where we are now, again at $77 and change. What I do see here is a potential cup with a handle, which is a positive pattern. If that continues to work out here, we're a little early in the scene here, but it could be the beginnings of a cup with a handle. Here's the cup. We just need the handle to form. It hasn't done that yet. And also, if you look left, that April low was at 75, and the bottom of this cup may hold here at 75, with the operative word being may. So I like this initially at any rate. And please know I'm not going to force any trades next week. Not going to happen. I told you I'm in patience mode. But in the coming week, if the S&P, if the S&P is behaving reasonably well, and if the XLP can stay above its 20-day moving average, it's coming in at 76.89. Just say if it can stay here above 76.50 or so, I want it above the 20-day. I'm not going to give it much room. I will buy a small position in my trading portfolio with a stop, and I'm going to put my stop down here at 75.50. If you want to make it higher, you can. If and when the XLP closes above, I want it to close above $80.50, or at least above this $80 pivot here, resistance point. By then it should be above the 200-day, which is coming in at 80.36 right now. Then if it could trade above that, I will add to my position, and my stop will be a trailing stop. So you may want to keep an eye on the XLP in the coming week. And please know that at ToniTurner.com, we lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. In my program, How to Bottom Fish Like a Pro, one of my favorites, you'll discover a simple yet profitable strategy that all traders and investors want to know. Guess what it is? How to buy low and sell high. I'll show you an easy-to-learn step-by-step process that tells you when to enter an undervalued stock, how to manage the position, and as you see certain signals that the uptrend is about to end, when to take your profits. Our new low price for this program is only $199. And by the way, some of my trainings listed here are priced at $59. When you order, you'll receive special bonuses, including 1 month of Metastock daily charts or Metastock real-time charts for free. And once you purchase, you'll have unlimited access to learn at your own pace. So how to read charts is $59. 3 winning setups is $59. And by the way, this page had problems. It's all fixed. Everything's all fixed. So from our ever popular 7 Steps to Successful Trading to How to Swing Trade Successfully, definitely one of the most popular programs. How to trade the trend to profits, certainly one of my favorites. Again, how to read charts, great for novices. 3 winning setups, great for short-term traders. And how to bottom fish like a pro. Discover how my online programs can help you earn more money quickly and easily. Check them out now by going to the link on this screen right here, or easier still, just click on the orange button below. Until next week, keep green on your screen. Be careful out there. I'm Toni Turner, and this is The Market Now.